You know, there is a shutdown effect on the markets. I know we sort of dismiss it, that they're ignoring the shutdown, but there is a reason to believe that the Federal Reserve is peeking at this and saying, well, that makes it less likely we're going to hike rates anyway, as if that was a threat long before the shutdown started 28 days ago. But a number of Fed governors, district presidents have kind of echoed that sentiment here. To Moody's Capital Markets Chief Economist John Lonski. What do you make of that, John?
Well, I think that if the government shutdown succeeds at materially slowing the U.S. economy, makes a rate hike less likely. You know, that being said, however, the Fed is also looking at the behavior of the equity market. And since the government shutdown, the market value of U.S. common stock is up by more than 11%. And perhaps that's increasing the likelihood of a Fed rate hike, not in the first half, but later this year. In fact, Fed funds futures, the probability that Fed funds futures assigns to a rate hike has increased from something less than 20% not too long ago to a number approaching 30% this afternoon.
Is that right? I didn't know that. So let me get your sense then about the shutdown's effect. Now, like hurricanes or major storms that buffet the economy in the affected region, normally it all works itself out, not easily for the people affected. I don't want to minimize it. But whatever's taken out of the economy is put back into rebuilding or people getting back to work and spending money again. And it sort of is a wash. What do you think is going to happen here?
Well, you know, these are hardly normal times politically speaking.
Very true.
Two sides seem to be so far apart, there is no telling how long this shutdown might last. And some are now making the claim, and perhaps it's a reasonable claim, that if this shutdown lasts through the entire first quarter, we may see economic growth go from something like 4% in the third quarter to perhaps something approaching 0% in the first quarter. And, you know, some people do get hurt permanently by this. Private sector contract workers don't necessarily regain the income that is lost. And, you know, likewise, there are a number of businesses that depend on spending by government employees, and that spending may not come back entirely. And there are side effects. You know, on the mortgage market, it becomes now all the more difficult to have your FHA-type mortgage approved by the federal government. You lose a few home sales. And I'm not about to go ahead and travel for leisure, given the fact that we have these long lines at airports because of a reduction in the number of TSA workers.
That's right. Is there any sense that you have that the bond market is telling us something? I don't want to get into something so weighty here, but that the fact that interest rates have remained low. I know we just hit a high for the month here, but we're still very, very low. The gap between really short-term rates that the Fed controls and the market rates has narrowed precipitously. And I'm wondering whether that's telegraphing beyond the shutdown something. What do you think?
I think it's telegraphing slower growth ahead, even after government operations are restored. We also want to consider, however, what's going on in the high-yield bond market. You know, all the while, quietly, we have had quite a rally in high-yield bonds, a narrowing of spreads, despite the fact that Moody's Investor Service predicts a bottom for the high-yield default rate come this spring, but then a rise by the high-yield default rate through the end of the year, who knows, into 2020. The bond market's skittish about the outlook for the economy. The Treasury bond market is, and it's responding to expectations of slower earnings growth in 2019 and a further deceleration by corporate earnings in 2020. Where does all this end? That's my question. And if we continue to see the economy slow, profits slow, the default rate move higher, well, that leads us to only one place, and that place is the nasty place of recession.
Wow. I hope you're wrong on that, as much as I respect and love you. All right, John Lonski, thank you very, very much. Have a good weekend. Be safe.
You too.